Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so, HIMS, I have really not looked at that. Yeah, shorting HIMS. Personally, I don't really like to short stuff that's so volatile, whether that's buy and puts or, to be honest, I don't know how to short stuff other than buy and puts or getting ETFs that are inverse. But yeah, on Friday we saw what looks like a pretty big topping signal. Big wick to the upside, hitting a high of about $65, hitting a high of 64.84, closing notably lower at $60.47, but being up on the day at 2.18%. And also closing higher than it opened and closing higher than the high from the 13th, which was at a price of $59.55. So, looking good in that sense, but with this big wick to the upside closing in the bottom portion of the trading for the day, doesn't really look so good. Looks like it could be getting exhausted. And also, if we look at the volume over here, volume was very high on Thursday at 42.82 million shares traded. But then if we look at the 14th, it came down to, 38.73 million. So it is coming down. So that doesn't look so good, even as it's making a higher high. That is showing some exhaustion there. But if we look relative to the past, it is still, elevated volume. But what have we seen over here? We did see, even on these spikes in volume, we did see some pullbacks. So yeah, I think this could be pulling back, especially with earnings coming up on the 24th. So I believe that's going to be Monday of next week. So, getting pretty risky with that. And just trying to think. We do have the RSI here at 87.68. On Thursday, it was 87.14. So, yeah, getting very high there, very overbought. And let's see, are there some trend lines that we can draw here? There's one that kind of stands out to me. I might have to fudge it a little bit, but just kind of arbitrarily going over to here. And then, actually, how I might want to draw this is something like this. And then, yeah, we did, kind of get rejected from these levels over here. Maybe I want to draw it like, I don't know, this I can draw in a few different ways. I kind of just want to get all of these levels to be intersecting with that. Maybe getting it over here. No. So, yeah, it does look like we had a fake out break above it over here. But, if we go back in time to, maybe we can even move it to the highs from, let's see, November 7th of 2023. We were not able to get above that level over here. Then looks like I'm going to delete this line over there. And also this one over here. We, failed to get above it or hold above it here. This is in March of 2024. Got a pretty nice pullback. We did get kind of a fake out break above it in June of 2024, but then pulled back, kind of got this double top rejection below that level. And we can see here we did put in higher high, forming that double top, but volume was lower. So that suggests some weakness, and then did get a pretty nasty pull back to the 200-day moving average around, let's see, $14 there. And then, we did get another test to that level, but again, a rejection. And I'm just going to lock that in place so it doesn't accidentally move. And so, I could see a pretty nasty pullback from where we're currently at, coming down about 30% to test that uptrending level. So do keep that in mind. And then also, if I do a Fibonacci retracement from the lows following this pullback, and so let's just see where those were at, 2407 going up to the highs of 64.84. Let's see if I can get that right there. All right, yeah, so the 618 is corresponding to a price of around $40 a share. So yeah, I could definitely see this pulling back to around 40. That seems like a pretty safe bet to me, but when is that going to happen? I suspect following earnings. So if it does continue to go higher, if people continue to talk very bullish about this on social media, they might be the sheep that are, going to be buying the shares that you're selling short. So do keep that in mind. Lots of things suggesting, confluence of levels here that this could be coming down to 40, which is about 30% drawdown in price from 60 to 40. And so, speaking of options, we got the puts up here. I like to go farther out into the future. So let's look at January. This is just the way that I like to play options. We see a $40 put to buy one of those. That's over $8, almost $9. And that is going to be like $800, $900. So that's kind of expensive. So maybe we do something a little bit sooner. So maybe we don't have a June expiration. So maybe let's look at July $40 put. This is a little more reasonable, $600 to buy one of those, but still pretty pricey. So let's look at May $40 put. Let's see. $4.20, also a fun number, but that would translate to $420 to buy one of those puts. And so let's consider, this is the soonest I would like to go, but for April 17th expiration, this is about $250 to buy one of those $40 puts. So those are ones that seem reasonable to me, but I will probably not play this. Maybe if it does hang out up here a little bit, but shows signs of exhaustion down below, then I might be interested in looking at that more closely. But let's look at, I'm actually just going to open up another tab to look at unusual whales and look at some flow data. And so I want to look at, let's see, not Celsius, I want to look at HIMS. So let's look at that data here. And, I just kind of want to clear all of that information. Let's just look at HIMS. And so what is going on? What stands out? I'm just kind of scanning all this stuff. This looks like, $50, $55 puts for February 28th. So that's a couple weeks expiration from now. It looks like 10 days. And so let's, look at this contract. And so we can see from Friday the 14th, got the 1 minutes up there. I might switch this over. The 5 minutes. And so we can see got this big alert here. This is a candle premium of over $500,000. So that is suggesting that, from this alert up here, volume has exceeded open interest. And so we can see that the open interest over here, it's really effectively been zero. But then on the 13th, on Thursday, we saw a volume of 1.3 thousand contracts traded. So that open interest went from one contract to 1.1 thousand. And then we saw another block of, volume over, 1.5 thousand contracts traded. And now that open interest, has been increasing by 1,000 contracts, 1,000 contracts. And so now it's about 2,000. And so maybe this is a put that would be exciting to play. But the premium there is, hundreds of dollars. So kind of expensive if you do ask me. But yeah, that's pretty cool to look at that. And let's just kind of expand this over here. If we do look at the bearish bullish slider above my head, 53% on the bear side, not too surprising there. We do see from Friday the 14th a net buying of contracts. That's why the volume down here is green. But what we see is the net call premium in green coming down along with the stock price in yellow coming down, although it did blip up, coming down, fading over the course of the day, with that net call premium coming down, being pretty notably negative, whereas the net put premium has gone positive. And so that is, why we see the volume being positive here, being green. And so that is because we see a net buying of puts over selling of calls. And so if we do look at the premium here traded, the net premium over the course of the day, We see net put premium going up by $5.87 million on that Friday, whereas the net call premium came down by $11.56 million. And so you might be saying, why is this volume positive if we have the net selling of these calls, the net call premium coming down by about double the net put premium going up? And so that is because the net put premium going up is because cheaper puts are being bought. So a large number of cheaper puts. So you're going to have a large number of cheaper contracts. That's going to push the volume up. Large number, large volume, lower premium. That's the difference here. Versus you have a smaller number of higher premium calls being sold. And so that suggests to me that those calls are taking profits at the top over here with earnings coming up and, with puts establishing cheaper positions. So taking profits on those calls, buying cheap puts to then take profits later. So this overall looks bearish. I don't know which contracts are appealing to be trading, especially with earnings on the 24th. This is looking at, an options expiration after the earnings call. And this is, we're seeing total premium traded close to $1 million, 911,000 on the 13th, and then about 750,000, almost 60,000 traded on the 14th. And so we are seeing, that premium going up. And for just this one contract, but across the board, we see that nearly 6 million going into net put premium, whereas nearly 12 million coming out of net call premium. So that is a little bit bearish. But if we do, flip back to here, just want to look at the flow feed for HIMS. What are some other ones that stand out as being, these are 21. This is before earnings, so I'm not really interested in that. $50 put. This is for August expiration. So yeah, let's maybe look at this one. This had a premium of 100,000. This the premium just really expensive on this. So I probably won't be trading this, but I do find this data to be pretty interesting. And then if we do look over the past 7 trading days, we can see kind of this change where calls and puts, net call and put premium is not really too high. Getting into the millions, net put premium going up 4 million over here, going up 3 million. So this is more net bearish over here. But then we see the net call premium going up as price goes up. Net call premium here being around 7 million, whereas net put premium came down by about 4 million on the 13th. But then we see, this massive drawdown in calls, down nearly 12 million, as I had talked about, with puts going up to the highest it's been the past 7 trading days. And then if we look at 14, call premium, taking profits. And then if we look at the past 30 trading days, things are looking very different. Profits being taken here. So it might be a very nice time to buy some puts into earnings next week. But that's definitely a gamble. So do be cautious with that. But the data suggests and the chart suggests that this is probably pulling down to around $40 a share, so do keep that in mind. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this.